Welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. We're coming to you from the market site in Times Square with Keshav Rajagopal, co-head of exchange traded funds with PGIM Investments, and we're going to take a look at active managed ETFs. It's great to have you with us on set in Times Square. Now, let's learn a little bit more about PGIM Investments, sort of your role there, and why you decided to get into the active ETF space.
Absolutely. So PGIM is the investment arm of Prudential Financial. We're a top 10 global asset manager with over $1.5 trillion in assets. Within PGIM Investments, our base business is a mutual fund business where we have about $100 billion in assets. But we recently entered the active ETF space with the launch of our first actively managed ETF about a year ago, Pulse, which is the PGIM Ultra Short Bond ETF. And the reason for PGIM's entry was we're an active manager. We have investment capabilities across public fixed income, equities, real estate, and a number of other asset classes. But we felt it important now to be able to meet our clients with an ETF vehicle, just given the growth in that space, but being able to still deliver our actively managed solutions in that wrapper.
Now, the one-year mark is viewed as critical for newly launched ETFs in terms of gathering assets. Why is that?
You know, a lot of ETFs launch and the daily trading is important. Investors need to see that the products are liquid because that's one of the big benefits of the ETF is the intraday liquidity aspect. So typically, around a year is when you can judge whether that product has really taken hold in the marketplace. And we're really, really pleased with what Pulse has done. Within a year, we gathered about $250 million in assets, but even more than that, just the diversity and breadth of the client base, where we have retail investors around the country that are now part of the Pulse story is something we're really pleased with.
And that's amazing. Fixed income is such a key place for ETFs right now. Now, you've also previously spoken about alpha at the right price. That's core to PGIM's ETF Strategy. Tell us more about that because that's a big competitive spot within the ETF industry.
It is. You know, ETF investors, like all investors today, are very price sensitive, but I think even more so in the ETF space. So when PGIM entered ETFs, and like I mentioned, we wanted to do active management, but we wanted to leverage the scale of PGIM's platform and our investment talent to then bring our capabilities into the wrapper, but be able to compete very effectively and very early on price. So Pulse, the ETF we were just talking about, is priced at 15 basis points, making it one of the most cheapest active ETFs in the marketplace, and actually cheap overall even if you look at passive funds.
All right, now PGIM is all active. What are the opportunities for ETF managers going forward, and what differentiates your products from other active ones out there?
You know, ETFs in general in the U.S. now are above $3.7 trillion in assets, but active is just a small piece of that. It's just about 2% of the assets. So there's a lot of white space when it comes to active management in ETFs because investors have predominantly only had passive options. So what we want to be that active solution. So PGIM is the only top 20 global asset manager with an all-active lineup. So what we are going to try to do is strategically offer products where they're typically only a passive option, so that way we can offer investors now an active solution, something that they really haven't had much of an option around prior to now.
All right, now we recently saw the preliminary approval for Presidium's non-transparent ETFs. This is an interesting topic. What are your thoughts with this?
It's an exciting development. As I mentioned, active is just such a small piece to the ETF universe today, but I think with that Presidium approval and maybe other approvals that the SEC is contemplating around either non or semi-transparent ETFs, it allows active managers now to enter the space in a much more enthusiastic fashion because that daily transparency is an issue. We've gotten comfortable with it across our 6 actively managed ETFs, both on the fixed income and equity side. But as some more of these Presidium-like options present themselves, it gives active managers like PGIM more room to play and offer solutions to the marketplace.
All right, now to wrap up here, if the ETF rule is in fact adopted, how's that going to impact PGIM?
You know, the ETF rule, that's another great benefit if the SEC also takes advantage of some opportunities there and looks at that. It really is an unlevel playing field today when it comes to ETFs. A lot of the old issuers have broader relief and therefore more flexibility to do things and offer products to investors. So the ETF rule will harmonize the landscape and allow all issuers to be at the same level. So it'll allow PGIM, entrants like PGIM that are of the later variety to start being able to take advantage of some things that the older issuers have been able to do now for many years.
All right, thank you so much. Great conversation. Thanks for joining us at MarketSite. And thank you for joining me on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.